Ondo Finance urges SEC to delay Nasdaq's tokenization plan over transparency gaps. The proposed rule change relies on Nasdaq's vague understanding of how the Depository Trust Company, DTC, would handle post-trade settlement for these tokens. Ondo Finance is urging the U.S. Securities and Exchange Commission, SEC, to delay a proposed rule change from Nasdaq that would allow for the trading of tokenized securities. In a letter submitted Wednesday, the tokenization firm raised concerns over what it sees as a lack of transparency and a potential threat to fair market access. The issue centers on Nasdaq's plan to amend its rules to support tokenized asset trading. While Nasdaq says it expects the Depository Trust Company, DTC, the central clearinghouse for U.S. securities, to handle post-trade settlement for these tokens, details of how that would work remain vague. It relies on Nasdaq's preliminary sense of the process that it understands the Depository Trust Company, DTC, to be contemplating for settling securities in token form, no direct evidence of which is on the record, Ondo wrote. This deprives the Commission of information needed to determine whether the proposed rule change is consistent with the requirements of the Securities Exchange Act of 1934, Exchange Act. Ondo, which offers tokenized products like short-term U.S. Treasuries and exposure to U.S. stocks via blockchain-based tokens, argued that unequal access to information favors large incumbents. Smaller or newer firms are left without the data they need to plan or respond to market changes. Ondo says it could support Nasdaq's plan if DTC makes its process public. Until then, it's asking the SEC to open a formal review that could lead to disapproval.